Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing.
This is Aaron Edwards, Santos Springs, March 31st, 2026. Big report coming out in a few hours. We will go over some of those, just some technical analysis and some talking points on that. But the truth be told, the most important thing is just to make sure that we get caught up on the work that we need to get done before the report, and then hope for the best report, but be ready for, what do they say, hope for the best, plan for the worst. So let's go over that, but first let's start off with our recommendations. Let me go ahead and share the screen. So for this week, grab the marker, no action recommended. And it's really pretty simple. We've gotten, there we go in green, no action recommended. It's really pretty simple. We've gotten quite a bit of sales work done and on the books. The one thing that I kind of, with Monday's sell-off, I was kind of wondering, should we have done even more aggressively into spring and summer bushels on the corn? But honestly, we still have a long runway ahead of us on seasonality. Last year that we had one shot at it. And so you kind of want to overcompensate. But we'll go over that in just a little bit. But first, just keeping us updated, we've been tracking this ratio. So the way we've been doing this is basically new crop, let's say new crop corn is 1144. If we would hold new crop corn at new crop soybeans in green. Let's say new crop soybeans, SX26 is 1144. If we would hold that steady at 1144, and then we would accept that bean divided by corn ratio is anywhere from 2.3 to 2.7, what does that gives us in terms of a range? Well, it would say 497 corn would be the upper end of that range, and 424 corn would be the lower end of that range. So as we think about that ratio, can we have corn over $5? Yes, but if beans aren't going to rally, for us to get corn over $5, we would need to be skewing that ratio beyond a normal range. And a lot of people actually say it's 2.4 to 2.6. So 2.3 to 2.7 is actually even a bit of a buffer. And then if we flip it, we say, okay, well, if we hold corn steady at 484, new crop corn steady at 484, and then we accept that same normal range of 2.3 to 2.7, what could we see in terms of price potential for soybeans? And it would be 1113 all the way up to 1307. So in a nutshell, as you say, well, okay, that ratio is closer to 2.3. I'll even do that in a marker. That ratio is closer to 2.3. Well, we've been saying this whole battle for acres. I think this is the 5th week we've been tracking this table. Unless beans lift the cap, I think we'll be hard pressed to get a corn rally. And if we do, we did last year in February, we got that ratio way out of whack. But what happened was it just became much more advantageous to plant corn. And then we really got massive corn acreage. And we're gonna, even on today's report, unless there's a big surprise, we're expecting massive quarterly stocks compared to last year. We still have a lot of old crop corn on hand. And that's because that ratio got skewed way back, 13 months ago. So if the ratio isn't respected, and if we can get corn, say, up over $5 without a soybean rally, honestly, that's all the more reason, in my opinion, to be aggressively forward pricing corn, because the last time that happened, that was absolutely the right thing to do. When we got extra strong corn without a bean rally before planting, big acreage on corn, and so on and so forth. I want to focus. There's been a lot of talk about new crop. I want to focus on old crop. Before we jump into that, let's just look at the price here. Let me grab a marker. We'll go with blue here. As we look at the position of speculators, soybeans are still not long, that big overbought position, but this is last week was the 3rd week in a row that they've been trimming back on that. So speculators, yes, they're still long. Yes, they're still overbought. I don't see the appetite to continue buying more soybeans. Could it happen? Yes. Could the report today change stuff? Yes. But we need to understand that coming into this report, speculators are a bit cautious about wanting to be overly long. And when we look at a chart, it really makes sense. If we look at the July, so let's pick on July here. If we look at the July chart, this is usually a very, very strong contract. Yeah, we did see some strength. We saw it really peaking up there at 1240, got real excited. It did not stay in that high zone very long, and this has been somewhat of a value area. I think that this might be a value area that is a little bit friendlier to this, but we're in a downtrend. So we're in a downtrend, have been for some time. Speculators are stepping out of their longs. We need to get something on this report that gives us a reason to rally. If we don't, the tendency will be for gravity to kind of pressure this market either sideways or down. Unless we can feed the bulls with something friendly on this rally, gravity kind of isn't our friend on the soybean market. And then as we shift gears towards the corn market, let me get the position of the funds here pulled up on the corn market. So we get speculators 3rd week, last week was the 3rd week, I guess it was the 2nd week that they were overbought, but we've had just significant buying from over the last month. Speculators are really hungry for corn, and that continued. And that's very optimistic. That's very friendly. Maybe this thing is going to take off, but I just think we got to look at some symptoms. And when we look at old crop, again, the July corn, we look at old crop, and where's the marker? Here we go. Monday's trade fell below the support. Monday's trade fell into a downtrend. Speculators are overbought. So the thought process here, they say markets are cash, spreads, which is the difference between the nearby and the deferred, futures, right? Cash markets, basis is starting to soften. It's going down. I'm even going to do this in red. When we look at the corn market, the cash market, basis is slightly softer, pretty much across the Corn Belt. The spreads are near their weakest levels. It's not super bearish, but it's not friendly. And then futures just started showing some weakness now. So can we get a corn rally? Yes, we absolutely can. But I would be cautious about being overly bullish in this environment. Cash markets are not strong in the old crop. The spreads are not showing strength. This is not a demand-driven, oh gosh, give me corn rally. This is a speculative-driven rally. And unless you can continue to get speculators excited about buying corn on the other side of this report, there's not really a fundamental story that says you should buy more corn. Don't misread that as, oh, Aaron's super bearish and this is the end of the world. That's not what I'm saying. But if we look at technicals, and it's always scary to talk about technicals ahead of USDA reports, let's say that this market does sell off. Let's say that the July comes down here and then it finds willing buyers somewhere around 450 or 460. Well, that's a far cry from, say, 490. That's down 30 cents. But it's also, look at where support was the whole previous year. If we're getting support coming into the spring at 450, 460, that's not horrible news. We went about 12 months where that was about the best price you could have gotten on your corn. So if we find buyers in here somewhere and gets a little bit of a weather story, we can absolutely still have a recovering corn market. But just shorter term, I'm a little nervous about this report because we don't really have fundamentals giving us a strong case. What we have is speculators overbought, and yeah, they can buy more. If they say, I really want to own corn, they can punch that buy number and nothing really stops it. I don't really see a weather story now. I don't really see a delayed planting story now. And we basically, the only straw, in my opinion, that gives us hope for a short term, say this week, next week, bull run, is a friendly report, which can happen. But we've all been around enough USDA reports to be cautious about betting the farm on a friendly USDA report. So now let's just summarize it all. And to some extent, this is a little shorter just because it's straight to the point. Because the truth of the matter is we got to, pick a shiny coin in our pocket, throw it up and see what the USDA will say and how the report will react. And that'll give us more guidance on the other side. But let's look here at just a breakdown of the indicators. When we look at the corn market, seasonally, it is a sell. The managed money is saying to sell. And until yesterday's trade, which Monday's trade pushed us into a downtrade, we were in an uptrend, but now we're in a downtrend. It's just, the indicators are saying sell corn. That's all I'm trying to say. And the basis is showing that it's not a fundamentally strong corn market. We're expecting quarterly stocks to be quite a bit bigger than they were in 2025. Shifting gears to soybeans. Tomorrow, on April 1st, it'll be time to sell, but so March it's not yet. Managed money is saying to sell. And then the trend is down if you look at the old crop. New crop is right on the fence, but old crop, it's down. Now let's talk a little bit about basis. Basis levels have softened across the Corn Belt for both corn and soybeans as futures rallied. Softer basis levels show that this rally is led by speculators, not by fundamentals. At this time, it is not a demand-driven rally. because it is not led by cash markets, comma. It is not a supply-driven rally because it is not led by fears of a shorter crop. It is a speculative-led rally. Technical analysis, hours before a USDA report, does not hold much value as the underlying fundamentals can shift drastically and change support and resistant levels. That said, it is noteworthy that Monday's trade pushed corn into a downtrend ahead of the USDA report. We don't have questions to go over this week. We'll hope for a friendly report. In my opinion, it about has to be a friendly report for us to keep speculators buying this market. Either that or we just need external forces to just say, I absolutely want to own corn and soybeans because of the geopolitical scenario. And so again, it's still speculative purchases. It's just not speculative purchases tied to the report. I'm cautious that we're going to just see fundamental numbers that remind us that we're not really that short on corn and soybeans, and that profitable prices attract acres. And I'm cautious that the fundamental story on the other side of today's report will lean bearish. But again, I've done this long enough to know that trying to guess these reports is a good way to keep you real humble. So we'll see what they print. We'll see how the market reacts and touch base moving forward. Great rest of your day. Great rest of the week for you.